Hello there. So starting a business the starting part is easy. It's when we get into running it and it starts to do well that it starts to get confusing. And there are all these rules and we hear things from our friends and then we're not sure how to go about it. So then we look it up on the CRA's website and it's just oh, this isn't helping. So I'm today gonna go through some of this confusing stuff and just unconfuse it. Deconfuse it? Neither of those are words. Straighten it out. So I want to talk about GST, HST first. So your company's doing well and you know that you pay GST at the store, so it makes sense that you would charge GST to your customers, right? Well, like with everything accounting related, it depends. So you have to register for sales tax, GST, HST, if you reach $30,000 in gross worldwide income, so even if you're selling to the States, in 4 consecutive quarters, so in a year, but not necessarily in a calendar year. Like if it was July 1st to June 30th, still counts. Most of us know that one. Most of us know that if it's $30,000 that we need to register for GST, and we do it. I hope we do it. That's a pretty common one. But the tricky bit is in the details. So, for example, if you register for HST, but you haven't hit the $30,000 mark yet, do you have to charge HST, or can you just wait until you get to $30,000? Well, if you register for HST, then you have to charge the HST. So if you're gonna register early, if you're gonna voluntarily register before hitting that $30,000 mark, you do need to start charging your customers and tracking the HST that you're paying out. Also remember to put your GST, HST number on your invoices. They need to go on every one of your invoices, and you need to have the sales tax somehow carved out. So your price can include sales tax, but you need to show the amount of tax on your invoice. The other bit is that we have to actually go and register with the CRA to be able to charge HST. So sometimes I talk to people who are like, well, I was over my 30,000, so I just started charging HST. Part of that is right in that they were over the $30,000, but you have to actually register with the CRA to be able to do that. So how that works is you get a business number. So you register your business with the CRA and they give you a business number. That's like your account number with them. So on the personal side, you have a social insurance number, and that's the account number basically with the CRA. So that's the number that you need to be able to file your taxes. That's the number that you need for your benefits, like all that stuff. So your business number is the same thing on the business side. They give you this business number. Now, this business number can then be used to open up accounts or programs with the CRA. So GST, HST is one of those. When you get your business number, it's 9 digits, that's going to be your GST number, or sorry, that business number is the 9 digits, and then RT0001 will be your GST number. Hopefully that clears up a little bit about GST, HST, and doesn't just make it worse. So let's recap. The $30,000 threshold for needing to register for GST is a common knowledge thing. However, we need to make sure that if we register for GST, we're going to charge it to our customers, and that if we hit our $30,000, we're going to go and register our business, get ourselves a business number, and open up a GST account with the CRA so that we can charge it. When you do that, make sure you attach it to your company and not to you personally, unless you're sole proprietor, because because that can be tricky to untangle. If you have a question about that, then you can either leave it in the comments for me, or you can book a call with me. I left my booking link in the description, but I'm not going to say any more about that because that gets into a whole other can of worms that maybe we'll talk about in the future on another live video. So that's GST, HST issues with the account. The next one is payroll. So payroll is similar in the sense that you have an account with the CRA. That's your payroll account. It's like the business has an account, and it's the 9 digits that are your business number, then RP for payroll 0001. That's your payroll number. So if you hire somebody and you decide you want to make them an employee, you need to register your account. You need to open your account for payroll with the CRA. You can't put someone on the payroll and like QuickBooks allows you to run payroll, and it makes it really easy. So it's easy to just do it and send pay stubs to your employees and make the appropriate deductions. But if you haven't set up your payroll account with the CRA, then it's bad news. I'm not going to go into a lot of details, but it's bad news bears. The payroll account is where you remit the deductions, the source deductions from your employees, so the CPP and the EI and the income tax that you're taking off their checks. All that money you've collected in trust for the CRA, and so then you have to go and remit it and pay it over and use your payroll account number to actually do that. So if you're going to hire somebody and it's going to be an employee, make sure that you open a payroll account with the CRA and you talk to somebody, even if it's just real quick in the beginning, just to understand how payroll works and what the filing deadlines are and what your requirements are as an employer. The CRA is really not very lenient about source deductions, so if you're late on paying them, the penalties are pretty steep. And if you don't pay them at all, that's when the CRA starts to take extreme measures. That's the kind of thing that they'll like clean out a bank account for. So payroll is important to get right. So I recommend just chatting with somebody who knows, even if it's just in the beginning, to get a handle on what you need to do as an employer. The last one, not the last one, but the last one I'm going to talk about is when you have dividends. So you've been paying yourself out of your corporation all year. You've just been transferring yourself money. And now we're at your year end, and you have to deal with that somehow. You have to do something with it. So if you just owe the company money, there's all kinds of rules around that. And you know, if you're taking that money because it's not a salary, that's a different thing. We just talked about payroll. If you're taking that money because you need it to live on, then you really should be paying tax on it personally because you needed it personally. So a lot of times what we'll do is we'll declare a dividend to just to account for the amounts that you've transferred out of your corporation throughout the year. And the dividend is investment income, so the company needs to prepare a T5, and that's what goes on your personal taxes. I recommend chatting with somebody. If you have a corporation and you're not totally sure how to pay yourself, I recommend chatting with somebody that knows about this kind of thing, because if you're just transferring money out of the company like we just talked about, and then you get a T5 at the end, there's nothing wrong with that, but the company has paid tax on that money, and then you're going to pay tax on that money as an individual. So in the beginning, when it's like less than like 70-ish thousand, depending on what's going on in your taxes, because like there's so many variables, it's usually worth it to do a salary, because the salary is deductible for the company for tax purposes. So that it's like the company's not paying tax on that money and then you're paying tax as well. It gets to be deducted from the company's income, and then you pay tax on it. There's a lot of little things that go into that calculation in terms of like what's the best way to go about it, but now I've gone down a rabbit hole, I've just realized, because I love talking about this stuff, but maybe you don't. But so anyways, the point of the matter is chat with somebody who is a professional if you are not sure how to pay yourself. So what have we learned today? That if we have sales tax, like GST, HST, or we hire someone as an employee, or we're taking money out of our company in some way, our corporation in some way, sole proprietors are not part of this, we have to register an account with the CRA. Sole proprietors can register GST, HST, and payroll, but they cannot register dividends. I'm not going to talk about why, it doesn't matter. So if those three things apply to you, make sure that you probably chat with somebody in the beginning, and that you open your appropriate accounts so that you don't get dinged with penalties and interest later, because that's no fun. If you have questions for me, you want to chat about any of this, then let's chat. Let's do that. I left my booking link in the description, as I mentioned earlier, so you're welcome to book 30 minutes with me for free, and we'll just chat about it. I obviously like talking about it, so please join me for that. If you have a question that you'd like answered in a future video, could be about anything, then leave those in the comments for me. I'll do a video just answering that question, just for you. I'll even mention you if you really want. I don't have to, though, either. It's up to you. Anyways, enough about that. I will see you tomorrow.